Good morning, Wall Street winners. It is Thursday, May 16th, and it is the pre-market leading into Thursday's open. It is about 17 minutes after 7. And as you can see here in our Bloomberg app, we have all three of the North American indices in the green off of some positive news on multiple fronts. So yesterday we had better than expected CPI data, which drove the markets higher, which was a positive. Today, if we flip over to the Yahoo Finance app and scroll down into our list of health and retail stocks that we follow, Walmart has come out this morning and posted better than expected sales and earnings. And that is causing a bit of a bump in that stock. It's up almost 5% pre-market. So that's good news from a retail perspective. It appears that even wealthier consumers in the US have shifted some of their buying habits to some of the more value-based retailers, which Walmart would fall into, and are spending those dollars, but spending them wiser and trying to get more bang for their buck by spending them at retailers like Walmart, as well as through e-commerce at Walmart, as well as Amazon. So we're seeing some positives there. The other thing that we've seen today is through the Chinese stocks that we were looking for news on. So JD.com, you can see that it is up pre-market as well, almost 4%. And that's because if we scroll down, they beat earnings estimates as well. So that's a positive coming out of China. If you read into that, it sounds like their sales were up around 7%, which is in line with what the increase was for Alibaba as well a few days ago. And then if we look at Baidu, another popular Chinese stock, it is up as well today with positive earnings. So not as much, but about 1%. And you can see that the stock is jumping as earnings top estimates, and cloud revenue has grown there. So these are positive signs coming out of China that we may be starting to see the first part of the recovery that has taken a lot longer to occur, and it took a lot longer in North America to occur than the analysts had predicted. So I think what we're going to see is that Chinese economy start to heat up this year and get back on pace to what it was at in pre-COVID years. And that's going to do good things for the economy as that country is a huge consumer in both goods and travel and other areas. And so when those consumers are feeling good about spending, they're going to travel more. That's going to boost travel stocks. That's going to create tourism. It's going to really pump a lot of money into the economy globally. So that's a positive. We're going to see right now in the pre-market that a lot of these retail stocks are in the green heading into the open. Still a couple hours off the open, obviously, so that could change. But it does look like it could be a positive day. Crude is off slightly. It was off more, but it's down only 6 cents. It looks like we could be having another positive day. Even though things are in the red right now, I expect that crude's going to get up into the green, and we're likely to have a positive day in the oil space as well. So we're seeing some fluctuation here, certainly some opportunity to buy on a dip and then ride that bit of a correction on upwards, or a recovery upwards, not a correction. So we do have an opportunity here for some moves, but you have to be careful in here, particularly looking at stocks like AD as an example, a utility. Wouldn't be getting into that right now near an all-time high for the last 6 months. But I would look at things like Chevron and Valero and Exxon. And if you do see a dip, for example, with Valero yesterday, just after open, it dipped down quite a bit. Would have been a good opportunity to buy in along with Chevron, along with Exxon. So they all kind of followed a similar curve, Devon Energy as well. And when you start to see that trend amongst these different oil stocks within the same sector, and then you look down at what crude is doing for the day, if they're tied into that and crude starts to recover, it's highly likely that you could see a recovery there within the stocks. And that means it's an opportunistic time to make a purchase and then sell that as it comes up. You can exit at a point where you're happy with your percentage gain. If we get back into tech now, so tech is, there's some all-stars in this area for sure. We're seeing CRM start to come back. So CRM has been sitting in the low 270s for the last couple of weeks to a month. And it's starting to come back. It made a positive move yesterday, up almost $11, up to $287. I think we're going to see, as we come into earnings, which are in 13 days, we're going to see this stock, if it has good earnings, get up into the 300s, maybe the 320 range. I'm a big believer in Salesforce as a company, having used that product and know of a lot of others that do as well. Big market share leader there and lots of opportunity. Another one on the cybersecurity front that I've been talking about recently is Palo Alto, PANW. It had a banner day yesterday as well, up almost $11. Looks like it's up about 4.5 in the pre-market. It's got earnings coming out on Monday, so waiting for some good earnings there and expecting that. Again, another stock that was down in the 280, 290 range not too long ago and is now up into the low 300s and probably looking to climb from there. If you look at the chart of this stock, you can see that back here in the February timeframe after earnings, it took a massive hit with an earnings miss. And I think what we're going to see is some better earnings coming out of Palo Alto in the quarter, and that could bring it back up to those near 370, 380 levels that we were at before. I'm not sure it's going to happen with this quarter's results, but I think we should see it climb up into the 330s or 340s based on what we're seeing right now. If we continue to scroll down and look through some of the others in tech, ARM is set to make a move. It dropped yesterday $3 or almost 3%. In the markets. It was one of the semis that was off yesterday, but it looks like it's going to bounce back a little bit today based on pre-market activity. AMD is set to make a bit of a continued move today, up $6.50 yesterday and up almost $3 this morning in the pre-market. And then as we get down, Lam Research is up minorly, but still up. It had a big day yesterday, up $35. A lot of the tech semis did well yesterday. Broadcom as well, up $56. And then as we scroll down and take a look at the likes of NVDA, up 32, up almost 6 in the pre-market. I think with the earnings coming out of NVIDIA in 6 days, I think it's highly likely that this stock is going to start to move upward in anticipation of those. And then once earnings are released, if obviously they match or exceed expectations, it should continue to go higher. But there is the risk that if it misses on those expectations, that it could suffer a significant drop, and it would probably pull down a lot of the other semis with it if it did take a bit of a hit. Google had a great day yesterday, up there almost at 174. I'm going to wait for a pullback on that and some movement there. Adobe's been climbing back, so it had a nice gain yesterday. Looks like it's set for another gain today. But this is a stock that was in the $600 range about 6 months ago. And you can see that after some earnings and some other news around AI and some of the GPT-4 functionality that has come out that allows for videos to be created through AI automatically, this stock has been hit negatively based on that. So we'll see what the AI story is when they come out with earnings, but that'll be later in the quarter. But it is starting to make a slow recovery. And then the financials. The financials have been climbing steadily. I really like SoFi. SoFi dropped yesterday. I think it was a great opportunity to buy back in to a stock that has a lot of great potential, but at a bit of a discount. I do like it in that 727 range. I think it'll get back up into the 760, 780 range in the next couple of weeks. And then we've got your JP Morgan up at 202. Your Goldman Sachs had a banner day, up $7 at 466. So this thing is just continuing to climb, almost up, really up $66 or maybe $76 in the last month or so. Charles Schwab is doing well, up almost over $1.50 yesterday, up close to $79. And Morgan Stanley up over $100 right now. So got to be careful with these stocks because They are near their recent highs, but on a pullback or a bit of a dip in any one of these, it would be a great buying opportunity to get in and make that small percentage gain. Good luck with your trades today.